Hi, this is Joe Rabil with Rabil Stock Research. So what I'm going to do today is something a little bit different. We're halfway through the year. I thought it would be worthwhile to take a hard look at all the stocks inside of the Dow Jones Industrial Average. Now, most of you know that I've been working with institutional money managers and consulting with them for the past 35 years. And so what I like to do is just kind of go through and rapid fire, make sure I cover every one of the 30 and just give you a glimpse into kind of the conversations that I have with my institutions when I'm giving them a read on a stock. All right, so let's go ahead and get going. My comments are for educational purposes only. Please do your own due diligence before making any investments. So for those of you who came looking for a lesson at the beginning, I'm going to sprinkle in little minor lessons, small lessons along the way while I go through these. It still should be a lot of benefit whether you're interested in some of these stocks or not. All right, so let's start with Apple. And one of the things that, when you look at these big stocks, the top stocks, you always want to take a hard look at the relative strength. I mean, if the relative strength line has turned down, and I'm just going to show you something that I think is important. If I switch this from a weekly to a monthly, look at what's taking place in the relative strength line over the course of, say, basically over the last 6 to 9 months. You can see how this was just a dramatic outperformer for the past 5 years, and now it's starting to really lose strength on a relative basis to the S&P. So I think we want to look at that. Now, I'm going to jump ahead real quick just to show you the difference between something like that and look at what IBM is doing. You see the difference in this reversal? It's almost like they're changing places. All right, so just wanted to point that out. I'm going to switch this back to weekly because typically I'm looking at the weekly line to get a sense of what's taking place. But if you want a good exercise in looking for bigger picture reversals, especially relative to the S&P, go look at these on a monthly chart. All right, so I don't like the fact that the Apple has dropped down below its 18-month line. I don't also notice how there's no momentum on this last move to the upside. The ADX barely got to 25. We just don't have the kind of strength. Now, the good news is on the way down, as we came down into support at 75, we also didn't have any downside strength based on the selling. So I look at this as kind of like a waste of time stock. I think there's pretty good resistance to 225. We're pulling back. On the daily chart, we actually could get a little trading move. Because there's not a lot of strength in the ADX, I would probably just view it as a swing and not something more significant. But there is some volume here, so we could get another leg up into this much bigger resistance zone up around 225. Okay, so if we look at AMGN has this situation going where it's in this uptrend, right? I mean, we're still got the 18 above the 40, and that's been taking place for a long time. But there's not a significant amount of strength here. The way I look at it, we came too far down through the 18. The 18 is now flattened out and rolled over. It's flat. All right. Despite the fact that the ADX confirmed on the last up move, if the 18 flattens out like this, we're basically in a trading range. Now, the other thing you can look at is here's the swing chart, and this was the high and that was the low. We just made an inside swing. So we made a lower high and then a higher low. All right. So once we know that, we're not really trending anymore. All right. And we're going to need to see this kind of break out, especially when we're in a low ADX condition on the weekly chart. We're now looking for a breakout pattern to take place. All right. I think Amazon is actually in a pretty good position, but I'd like to see this check back into the lower 200s to set up a buying opportunity. When this crossed the 18-week was still declining. So typically what I'm looking for is, a decent pullback and a check back of that line and make sure that it's holding that level. But overall, I think this is in pretty good shape. If we look at where this pulled back to and how this held, the key support dating back to 2021. I think that's a pretty good sign. I think the recovery has been good. It's not been all that powerful when you look at the ADX, so I don't really want to chase this. I'm looking for a little bit of a pullback and a little bit better opportunity. Now, American Express has earnings coming in a couple days in the morning, so just be aware of that. We're going to a marginal new high, and now we're bleeding back through that high. So there's a couple things I'm looking at. Number one is, we're at a new high here, but the ADX really isn't confirming at all. Okay, and this could be early. This could be an early breakout that actually turns into a consolidation pattern. This really wasn't a breakout. It was more of a part of the consolidation. All right, so we want to be aware of that. Now, if we come back down and hold this 18 and form a higher low here, and we make it through earnings without doing a whole lot of damage, then I think we're in a stronger position to put this in a breakout position to maybe carry forward. All right, one of my favorite patterns out of all the Dow Jones is what's taking place in Boeing. We have this big triple bottom that it's emerging from, and it looks like the MACD is trying to cross. I'd like to get confirmation with the signal line getting across as well, but we're in a low ADX condition here, and we have a low ADX condition in the weekly. So if we have that, we know we need to look at the daily chart to see if we have any strength showing up, and we do. You see this last couple moves, we're showing really good ADX strength based on the buyers. This green line is showing the buyer's strength. And if it's above the red and the ADX line, blue line, is above 25 on the peaks, then we know we've got good buying strength. So right now it's only showing up on the momentum strength is only showing up on the daily chart. But I would expect, especially if we get a pause or a pullback, that it'll start to show up on some of these bigger time frames. So definitely a stock that I would be watching. Caterpillar has made a great comeback here. It was really in trouble. I thought that it might be breaking down here, but then it came right back up without failing. So that's kind of key. Like if we rally up here and we fail here, especially near the breakdown point, then I think this stock has a much, much more difficult time. But if you notice what it did, it basically came down to the next support area, turned up, and went right back up through this little mini breakdown area. All right, so now again, we're looking for some kind of a pause or a pullback, because when this crossed, it didn't really set up that way. Now the 18 is rising on the weekly, so the bias is up. Like we've got a rising 18 here, a rising 18 here, a rising 18 here. What I'd actually like to see happen is a break of this 18 and have it turn down, have that set up on the weekly, come down a little closer, and then when we get back above the 18-day again, then we know we're probably ready and we're in sync on all three time frames. So that's what I would be looking for. Software really hasn't traded all that well. Definitely a lot more interest in the semis and the like. So, just be aware of the fact that it's not like, it's falling apart or anything, but this is not, look at the relative strength here. This is just not trading all that well. And I think there's probably some risk of this coming down to the next support area, down a little bit closer into the lower 200s, maybe 205, 210 or something like that, just based on the weakness. Now, there's not a lot of strength to the downside either, so I'm not looking for this to fall apart or anything. But if it tries to turn to the upside, I would just think it's somewhat limited with resistance at 300. Okay, CSCO, I think this looks really good. It's been trading really well. We've broken out of a big base. There's a lot of support in the low 60s. If this does happen to pull back or pause like it's trying to do, I would think that's going to represent some kind of a buying opportunity. Look at CVX. So CVX actually is showing a little bit of improvement. We had, so one of the things I'm keying on is this big red bar, right? The midpoint of that big red bar is right about the peak of last week's high. So we really need to get through that. I think if we can punch through there, then I think we have the potential to at least work up towards this 170 area and work up to the higher end of resistance. All right. Now, what's interesting about what's taking place in a lot of the energy stocks is they had this monster move and MACD got way overdone in 2023. And now look at what happened. It's worked its way down to the zero line. So I'm still kind of thinking that this is a part of a correction phase and that it could turn up. All right. One of the things we can do real quickly is take a look at the quarterly chart. You can see that this is pulled back to the rising 18 quarter with the 40 above, but we've run into a little bit of overrun in the MACD, and that could mean that it's going to take a little bit of time to get itself up and running again. Look at something like Disney. Disney has turned the corner, but the momentum is not so dynamic that I feel like I need to, pay up for it. I'm going to look for a pullback a little bit closer to the 18 weeks, see if this can form a higher low. Then I think this could be in sync in all the time frames because this is starting to turn up here. We've got a pretty good look overall. We're trying to break out. We haven't officially broken out on the weekly chart. We've got this resistance back early 2024. So we do want to be aware of that. But I would say that there's a lot of improvement here, certainly something worth watching. If you're enjoying the content, hit that like button and also subscribe. So I'm on my services page at rabilstockresearch.com. If you click on that, you will see that at the top is the advanced trend and momentum courses. I am offering a bundle there where you get a little bit of a discount if you buy all 3 courses together. They are all now lifetime access. Go ahead and take a look at that. Also, the individual package is right below that. I offer 2 to 3 reports each week, plus a special video for that package each week. And also once a month, we do a live webinar. So if you have an interest, you can take a hard look. Also, if you just want to get started learning more about my approach, I would suggest starting with the book. There's a book tab on the website. You can take a look and get more information. Okay, let's look at GS. Goldman, I believe they announced earnings this morning. Not a lot of noise there. So, but there's pretty significant support. Let's just look at that level. I would say this last breakout area around 665 should be pretty good support if this does pull back, which ideally I would like to see, simply because it's gone too far too fast. Without some kind of a pause here, you got to start thinking it's sort of like a little bit of a climax move, at least on the weekly chart. So long-term trend looks really good. The momentum is good. We're starting to get the momentum going on the weekly chart. So the next pullback would be a viable pullback. Home Depot really doesn't look all that great. You can really see it on this chart where the 18 is this green line. You see how we were above it for a year and now we're kind of failing at it, and that line is rolling over. So not all that appealing from my vantage point. Is there a lot of downside? I don't think so, because there's not a lot of momentum to the downside either. So I'm looking at this 350 level. If we break 350, then you got to sort of assume this is in serious trouble. But I think the likelihood it's going to be more of a waste of time than anything. HON has really come on strong from this low in April. It's really taken off here. A lot of improvement. If you notice, we had this big base on the monthly chart, right? The monthly is really is in good shape. I would be using pullbacks on this to consider that as a buying chance. I already mentioned the strength of this relative basis on a longer term picture. It is a little, if you notice what's taken place here, look at where right before the breakout, we got an RSI buy signal where the RSI 5 dropped down to the even oversold. We only needed below 50, but it dropped down to oversold, while the RSI 20 stayed above the 50 level. All right, so we got that little mini buy right before the breakout, but then we had another one here, and we got a really deep oversold reading. Another one here, another one here, another one here. But when I look at this now, I'm seeing bull flag. So we've had 2 bull flags after the breakout on the monthly chart. So I'm sort of thinking maybe 300 becomes resistance, and this goes through a more complex correction now for the first time since the breakout. And that could offer another buying opportunity in that bigger picture pattern. But right now, I'm not as interested in this at this point. All right, JNJ caught in a range, not a whole lot to do until this can get through 170. JP Morgan has been a really strong stock. Look at the relative strength line here. Great performer for almost like a year and a half. What I'm noticing is the ADX not confirming this time around. We had really good ADX here, and then on the move up, we had enough strength to confirm the up move. We haven't confirmed it yet. Now, that doesn't mean that it won't, but we need to be on the lookout for some type of a failure pattern. If we fail here in a hard way without confirming, then you have to assume we're going to have a reversal on this time frame. That's how I read this. All right, so just be aware of that. I wouldn't do anything right now. I would stick with it if I were in it, but we do have a little counter parallel lines forming, and it's very possible this thing's going to at least pull back closer to the 18-week. All right, Coca-Cola is caught in this little mini range. Doesn't seem to want to get things going here. We don't have any momentum on the monthly chart, and we don't have any momentum on the weekly. On the daily chart, we don't have any momentum. On the weekly, we tried to get things going, but it just hasn't kicked in. I really think it's going to need to break out again, get back above this resistance level up here in the low 70s, 73, 74, and then I think this thing could get going. So look at something like McDonald's. This sort of troubles me in the way that it's playing out. We have no momentum to the upside. So we've been trending to the upside, but there's no momentum behind it. Now, that can happen on a monthly chart, but if you look at it on the weekly, we're also moving up and we're not showing any strength on that time frame either. Now, if we look at the momentum condition on the daily, it's actually on the sell side. So I'm actually thinking there's downside pressure here, and it's really going to need to hold this support area underneath 290, 285, something like that, or I think there's some downside risk in this one. Look at something like Triple M, nice turnaround developing. Let's take a hard look. I haven't actually looked at this myself. Let's see if the relative strength, see how the relative strength on the monthly is starting to show a sign of a turn for the first time in a long time. So I think this is a really intriguing pattern when I look at it from a bigger picture standpoint. Now, the question becomes entry, and we have earnings coming. So what I would probably do is see if the earnings can cause some kind of a pullback and maybe use that as a potential buying opportunity if we can get a setup. But I don't know that I want to chase this. I think if I'm buying this on an up move right now, I'd have to view it as a trading move. It just doesn't, it looks like it's gone too far, too fast to me. Look at something like Merck, which has just been in a really ferocious downtrend since early 2024. Now we're back down to this major support area from 2021, even early 22. So I think what's going to end up happening is this is going to try and form support, a new support area. But look at how long this process took. I'm not saying it's going to take that long, but it's going to take some time. This 18-month is declining. And if we try and rally from here, we're going to run into these lines. So it's anything that we're looking at to the upside would be considered a short to intermediate term trading move when we're below the 18-month line. Microsoft is showing a lot of strength, came down to support from the 2021 high, bounced off that like a rocket, and is showing pretty good momentum conditions, good volume pattern. We need a pullback. And now I would be actually looking for a pullback closer to 465, 470, something like that as a potential opportunity to be a buyer. Nike has made a nice little pop here, and I'm kind of believing that this has made a low, but we don't have any serious proof other than the recent volume action. We had a climax kind of selling and had really good volume to the upside, but we're going to need some follow through, and this is going to need to get through the 18-month line before we consider this as anything really meaningful at this point. All right, we're still in a downtrend on the monthly chart, so be careful. If you want to trade this, just recognize that you're going counter to the monthly, so maybe play smaller size and or play it a little tighter until we can get through that line. Nvidia, yes, this is impressive. Came down to the 18-month, rising 18-month above a rising 40-month. Great momentum condition in place. And then we come down and we make this new high. Now, because of the way this played out with the big move to the downside and then a big move to the upside, we're not getting the ADX confirmation. Now, I know that there's so much volatility here. It's hard for the ADX to keep up. So we have to recognize that. So what do? We go to a smaller time frame and we look to see if we have momentum on this time frame. And we do. We have a lot of momentum. So don't get too wrapped up on the fact that the ADX hasn't confirmed yet here, because we have a really powerful trend developing. We're at 55 in the ADX on the daily chart. This can withstand a little bit of pullback or pause or whatever. Should have a lot of support at 150. This is probably one of the more troubling patterns in the Dow Jones. This had this big topping formation, and now we've taken out the neckline of this. I think there's some downside risk. I don't think it's crazy downside risk. It probably comes down to 140 or something like that. The problem you've got is the relative. Relative is hitting like a 5-year low relative to the market. So, if you're a professional money manager trying to keep up with the market, this is not the stock that's going to help you right now. Is it going to hurt you a whole lot on an actual basis? Probably not, but it's not the type of stock that's going to show outperformance. Okay, look at something like Sherwin-Williams, caught in a range here. Now, what I look at is when we've got this little sideways pattern forming like this, and you can see it's kind of been consolidating here, just working sideways, we have a low ADX pattern. All right, when we have low ADX, that means you sit back, you draw trend lines on price, and you wait for a breakout. So we have to get this to break out through this trend line here before we can consider this a viable situation. Otherwise, it's really short-term kind of trading. All right, TRV has made a pretty good move here over the course of the last few years. It does look a little tired to me. This looks a little bit different. Look at what's taken place here. We broke out. Oops, hold on, let me do this again. We broke out. Let me just get this line. I can't get the line better. All right, this broke out here. above these highs. All right, but look at how the ADX is really low. So what did I say we need to do when that happens? Check and see if we have no momentum on the smaller time frame. We have none. All right, so that's a little bit more troubling. Now we have to be on the lookout for a correction or a reversal that could easily take this back down and maybe potentially even break the 18-month, but certainly kind of work its way down into the next support zone. UNH is what I call a falling knife drop, all right? When we get this kind of a drop. I did a study on this dating back, it probably dates back like 25 years, but it's still basically the same concept. When you violently break major support in this kind of fashion, it usually takes 6 to 12 months of rebuilding, right? So sideways action for the next 6 to 12 months. And what I found was on a relative basis, it took at least 9 months to start to see improvement. That's assuming that we started to base right after that. All right, so no big hurry there. All right, look at something like Visa. A great longer term pattern, and actually the momentum signs are pretty good. And even on the weekly chart, we had good confirming of momentum here. We've moved up. I think this is all a part of a consolidation. Don't get too concerned about this at this point because I think this is a part of a consolidation pattern. I don't think this should have broken out yet. I would be looking for the next breakout here as a pretty interesting setup. It's almost, I think it's about to set up a reverse divergence on the MACD versus the price. You see how this is making a higher low and this is making a lower low. So just keep that in mind. Another troubling pattern is what's taking place in Verizon because it looks like it's trying to break the 18-month line. Now, the good news about this one is there is no momentum to the downside or anything like that. I think there's a lot of support at 40, but it does become a waste of time. Now, Walmart, our last stock here, is trying to break through 100. I think if it can get through 100, it kicks off a new move. All right, we get a start of a new move. If we re-break the moving averages, then we're in a trading range and this becomes a little bit of a waste of time. Thanks for watching. If you have any stock requests, you can send them to stocktalk@stockcharts.com and I'll cover them on next week's show. Also, if you want to learn more about some of these techniques, I would go to my YouTube channel. Have a great week and we'll see you next time.